All right, hello everyone, and happy Tuesday. Hello, David Prince. I am Greta Wall. I'm your host of this weekly market check-in with T3 Live with David Prince. David is the leader of T3 Live's Inner Circle virtual trading floor. How's your day going so far today, David? It's a Monday feel on a Tuesday morning.
Yeah, it's considering some of the ugly action, we're prepared. It's a good day.
All right, good. All right, so the title of today's stream is SMCI a scam? So we're going to discuss that and many more topics, but we'll start off with SMCI and what David Prince has been doing with the stock recently. Inner Circle did have a killer day with SMCI short and puts last Wednesday. So remember, this was Nvidia earnings day, but ahead of the earnings in the afternoon, we were focused on SMCI for Inner Circle. This was, again, the day that they said they would be delaying their 10K, correct? Delaying?
Yep.
Or won't be able to, yeah. And so the stock was, wouldn't be able to file, right, on time. So the stock got beat up. And you can see here in the comments, people had a great day. Thank you for SMCI. What a great AM, amazing guidance, banger of a morning, all absolutely fantastic. It was a killer day, to say the least. David, though, had a really good point in his morning call that day, and a great, analogy you used, house on fire and all of those things. You can kind of go through that. This stock was already down a ton headed into this day, and then you were short, and it's not normal. It's not great to, short a stock that's already down a ton, but you saw opportunity here. So talk about what you saw in SMCI, maybe give us that metaphor you used, etc.
Sure. It has a sordid past because in 2018, I believe, they had some accounting issues and were fined a great deal and had to let go of the CFO. So, and the CEO is not well polished like so many of the CEOs we see. I'm not going to even say compared to a Jensen, compared to a KLA or an AMAT or Broadcom or Dell for sure. So people are weary. I certainly have been weary. I've been long at times, but been weary, and not recently been long. Anyway, the point is, so when they came out, after we had already seen a short report, and it traded well off the short report, right? It was a massive bounce. Opened down and rebounded 40 or 50. But then the very next day, when they announced they can't file their K on time, I said, listen, you're not going to have any natural buyers. The only people who buy the stock are people who are going to cover a short, because it's one thing to have them make a mistake and maybe go back and fix things, but this is like a house on fire. We had fraud in 18, then we had a short report that people had to question how real the company was, and then they come out and say they can't file on time. So I said, it's not a function of whether it's true or not. It's a function of, you go to a house, it's on fire, you get burned, you go to the hospital, you get skin grafts, you go through some of the, if you know anything about burn centers, it's a horrific situation. And then you get out of the hospital, you survive, you're all burned, and you go back to the same house on fire. So I said, no one's buying the stock today. No way, no how, not till it really gets slammed. And I said, I could see it down 100 at $400. And I guess it went to like $395. But I said, this is one of those days where even down 40 or 50, there's plenty of upside to be short this stock. So that was the analogy, and that was my thought process. Now it's a little more difficult. The days have gone by, and we've shorted I think a rally into 460 or 470 on Thursday or Friday again. But now they've expanded upon that. They won't miss numbers, or numbers won't change a great deal. I think the point here is there'll be a cloud over the stock, but there's nothing like that first entry where people are actually shocked. Like, wait a second, is this really happening again? So at that moment, I felt like it was I hate to say safe, but a great risk reward to be short.
Mm-hmm. When it comes to a stock like this, you have had a lot of history with SMCI in 2024. One of your best calls of the year was SMCI long back in February, when you called for it to hit, what I think your call was, it would hit 350.
It's like 300 pre-market, gapped up, they raised estimates, and I said, if this doesn't hit 400 right away, it'll be then it's a scam. I actually said that. I didn't know this was coming.
Right. So I want to talk about
this
that.
is too
back
cheap.
then you were like, back then, is this company a scam? Is it like, is this real? This movement, etc. But when it comes to a stock like this, where it's got a bit of a sordid past, the company itself isn't that great. What's the psychology of trading a name like that when like, hey, the underlying fundamentals of this company might not be great, but I see great short-term opportunity here in this stock, so I'm going to make my money while I can, even if I don't believe in the company as a whole.
At that time, it was far enough away from 2018, and we didn't have all these new situations, right? Whether it be the short report by Hindenburg, whether it be the recent announcement. So you can kind of look at it and say, for now, it's a little bit clean, but no, you're not buying the, Nvidia or AMAT or KLAs of the world. So, or even Dell. So I think you can look at it. Now go, 6 months down the road where we are today, there's going to be a cloud over this company for a long time. It's not going to carry that crazy multiple it had for a bit when it got to 1,000, because people are going to question the margins, they're going to question the management. Even if numbers don't change, they're just going to constantly have a bad taste in their mouth. So going forward, for me at least, it's going to be really hard to get excited about the stock on the long side. Doesn't mean it can't go higher. It just means that there's a cloud and there'll be easier plays, in my opinion. I can't hear you. Can you hear me?
Yeah, I was muted. Sorry. All right, let's talk about what you did on Nvidia after earnings. So SMCI was the big lead into Nvidia earnings for you guys that day, but of course the market and Inner Circle was focused on Nvidia's earnings after the market closed on Wednesday. I was listening into the room after Nvidia was reporting earnings, and you called out to 117, 115 as a key area that you would be a buyer. And you bought right around 115, and you were out not even 2 or 3 minutes later at over 123. Big moves happening in the after hours there. Talk about your thesis heading into the Nvidia earnings print and how you've managed your position since then. Of course, you've been long since the August 5th low around like $90. So a great long for you there. But talk about how you managed into earnings, after earnings, and what do you see with Nvidia now, a week later?
Okay. So what I saw was we were up 40%, 45% at one point off lows. Great company, leading the market, great numbers, not an expensive valuation, and really hard to shock anyone. So the setup, given the size of the move off the bottom and the fact that everyone expected so much, and options being very pricey, so very hard to actually buy options, really better as a hedge to use that volatility. So I looked at it and I said, listen, I'll stay long stock, but I don't see any alpha to the upside, and I wouldn't be shocked if call buyers and put buyers lose money. And really, it's a seller's print. We'll see what happens after hours, and if there is a huge reaction that gives us a price that gives us an opportunity on a trade, I'll take advantage of it. So the moving average was about high 113s, 114. So when I saw 115, I jumped on it, and I thought, this is a cute trade. Earnings were great, but as expected, people are selling the stock, and maybe we'll bounce to 120. Once it got to 123, I was like, well, this is crazy. I mean, we're up 7, 8 points tonight, so we sold most. But on Thursday and Friday, when people asked, hey, would you go back and buy it? I said, honestly, no. I said, I will just sit with what I have. I'm not excited about it here. I think the market was way too excited, not because the fundamentals, sometimes it doesn't matter what the fundamentals warrant. It's just where the market is. We're in a place where I was a bit bearish the market going into September for a multitude of reasons, where I thought semis maybe we're going to have a tough time, and moreover, where Nvidia might just take a rest. So I pointed on Friday. I said, I wouldn't be shocked if this sees 110 or even as low as 101. So I'm just going to sit with a long, mainly from, I sold almost all of that stock after earnings. It's what I have is really from that 97 through 90 area from, what was it, the 5th, whatever date that was. So now I think there's going to be pressure. Today, first thing I said is, hey, I'm long, but you probably short Nvidia. Probably is going to have some downside, and will probably lead the entire market down. I just don't see a great setup for the market, same way I did on Friday. So I think we're going to bend a bit more, and I'm sure somewhere around 100, 101, we will probably find a great buy area. Some people bought it today, I know, right there into 110, but I'm just not excited the market, so I wouldn't be shocked if we go a bit further. And my thought is, great company, long term, I wouldn't change anything. I don't think it's expensive. I think Jensen's a rock star. I think they are AI, and there'll be great opportunities to buy it. I remember when no one thought it would pull back, and then one day all of a sudden it, in a matter of weeks, went from 140 to 90. So there'll be a spot, and when it comes, I'll get excited again.
A big trade for Inner Circle on the Nvidia earnings day was actually Affirm. You had given some levels to the room ahead of the earnings report, saying you were focused on Nvidia, but hey, here's the levels you would look at for Affirm. 37 being a key level that you called out, and a key level the stock did hit after hours after earnings. Now, this wasn't just a one-day play for the room. We have 3 straight days of Affirm and some really big trades in Affirm. And I know you're still holding stock at this point as well. So let's look at the chat after hours. After they reported, thanks for the Affirm levels. Someone whispered 37, up to 37. So David was spot on with that print. And then day 2 on Affirm. This was on Thursday. You see great call on Affirm. Awesome Affirm. Affirm was great. These are screenshots from the chat. I think you were buying calls on the day. And the lottos, but also the same week and this week's call. So you were in both calls. And then day 3 on Affirm, you were buying stock off the open on Friday and trimming those and, out of them pretty quickly, but still holding some of your core position that you're holding. What is your thesis on Affirm here after such a big move higher after earnings?
So two things that gave us a big hint. Sometimes there's just a thematic trade. So you have a general idea of the market wants to own something, and you have some comps that give you hints, and you have a macro picture that gives you hints. So going into the print, I said we can't ignore Affirm because in the past it bottomed before many other stocks, right? And when small caps were in vogue for a few moments, it was one of the first to go from almost single digits all the way to 50. Just like we saw in Carvana, just like we saw in a few alpha stocks, we saw it in Upstart. Anyway, so what I said is we really got to pay attention because Upstart just went over 100% from those August 5th lows. Secondly, we now know we're getting rate cuts. These type of stocks love it. So after a decent print from Upstart, an amazing response from the stock, a better small cap market, if they really have a strong report, which they did and pointed to profitability for the first time in the fourth quarter, then you really got to get behind this stock. So I saw the move higher as the beginning of a re-rating that would take us to those previous highs from earlier in the year, which are 50. So every pullback for 3 days, we kept adding. We started, I think, mainly in the 38s, bought as low as the 37s, and then it bought every day but today on pullbacks between, I'd say most of the stock, maybe 40, maybe the highest we paid is 41. Today, I got pretty small because I saw 45. So basically, in a short period of time, we've gone up well over 20%, even after the print, right? So we got pretty small. And today, as we pull back, I'll buy some. I mean, here we are, 41.83, somewhere between here and 40. It needs a rest, which I said this morning. I said, guys, maybe let the stock breathe. It's up huge in a very short period of time. Great numbers. I think it needs to rest, maybe wear off some of its overbought status. It'll probably hold that gap, lows are down near the 37s, and provide a great trade all over again, probably through recent highs that were 45 up towards 50. But that could take a few weeks. So very bullish over the coming weeks. Short term, I think it needs to take a well-deserved nap.
All right. And then your last big winner of the week last week was MDB. Your morning call on Friday, you called out 275 as a good buy area. And it just so happened that 275 was the bottom of the day on Friday, and you bought right there. When you are, what's your thesis on MDB? And then talk a little bit more about when you're choosing these levels, because your levels tend to be very spot on for many of the traders in your room. How are you picking these levels? What is your strategy? Just so people can kind of see how your process works.
So there's some fancy chartists out there, right, that are so much better than me, like a Jake, Banana, and all these guys. They got so much stuff going on. I don't even know what half their terminology is. I have muscle memory, and I use it to my advantage. And if you look at the after-hour lows after the print, 275 were about it. So then the following day, I always like to say short-term muscle memory wins. So I said, listen, if we're going to pull back, which I anticipate it was up 40, 50 points, I said, I anticipate at some point intraday we will, as close as we get to 275 would be a great spot. And that's frankly exactly why I came up with that. And then if you look a little deeper, because I like to have some data point to say I'll be correct, I said the 21 day is not far beneath there. I'm not looking at the chart, but I remember it being a few points beneath. I said, ideally, it all makes sense. It'll hold above the 21 days, still look bullish, and it'll give away a little portion of the gap that enable us to buy it. So that's why I bought it, because muscle memory told me last night's lows should hold again, and they did. So little less about like, oh my God, this moving average crossed this level, and this is a doji, and that's a bullish hammer. It was as simple as, hey, this is where the stock bottomed last night. I wouldn't be shocked if it does the same thing today.
All right, great. All right, so it was overall killer week in the inner circle last week. You can see some of the comments here. Best chat room. His buy levels are typically money 95% of the time. It's a learning experience. I'm soaking it all in. Amazing week, building my base hits and doubles. Thanks, DP, for SMCI and Affirm. So that was the end of August in the inner circle, and it was a great killer week to close things out there. But you have said that you are more bearish the market heading into September. So coming off a week like last week with the wins that you had last week, how do you set up your mindset for the beginning of a new month today, and how you're kind of, your thesis is shifting? You're feeling a little bit more bearish the market. You're not very excited about the market. How do you
constantly put on hedges if I'm going to be long, and beyond hedges to not drink the Kool-Aid, meaning like just because I'm up, not to assume I'm going to make more money long and even more money. So example, Redfin got an upgrade today, and we were buying it mid-9s last week, and as low as I think I bought some as low as 920. So B. Riley, smaller firm, put out a good report today. Stock was very strong. It was above all the averages, got to like 1070. I said, listen, this is nuts. Stock's up like 12% on the day. I don't care how good it looks. I am bearish the overall market, whether it be small or large cap. I'm not loving the market here. I think I'm going to sell most. MDB was up another, I think it was up another 5 this morning. God, I want to hold it, but I'm bearish the market. So MDB, I got flat actually and sold it all. So I think it's a combination of understanding that we still are ruled by the climate. The climate are the indices. The indices I'm not too bullish on. I'm not saying we're about to fall apart. The market's about to get killed, but I do think a correction is warranted for many reasons. And it's to take profits when they're there. So that's what we did with Redfin, with MDB. And I'm only giving you those examples because that's my mindset, is if profits are there, to lock them in, especially where we are now in the next 2 weeks, and throw on some hedges. So Friday, it was Helene Meisler said on Twitter, she said, JPM has only been down 1 day since August 6th. And I thought, how is that even possible? I looked at the stock and I knew it was straight up. I mean, because I sold it like 40 points ago and I'm pissed off. And I said, wow, I don't care how good the chart looks. I got to be short this, but I don't want to fight a trend like this, but I got to buy puts. I'll give myself some time. I'll buy September, and it's also acts as a cute hedge if the market does want to come in, meaning the overall market. So it won't just be tech, it'll be everything. Today, the market pulls back, it goes down a lot, and it acted as a great hedge. And my puts that I bought between like $2.30 and $1.80 went to like $3.40. So Kira, who I keep mentioning, hey, if you want to buy puts or you want to buy some VIX, she bought UVXY on Friday. While the market was ripping and everyone was excited, I was buying JPM puts, she was buying UVXY. So I just think it's a market to not drink the Kool-Aid, always have some hedges on if you're levered long, and sprinkle in some shorts. Two-wave markets are great for traders.
Great. You're not the only one who's turned a bit more bearish on the market. Tom Lee, the Uber bull, is cautious all of a sudden. He says there's room for a 7 to 10% pullback in the weeks ahead. And as we've heard here, you've been cautious heading into this, but getting more cautious, more bearish. What do you think about the call from Tom Lee and how that impacts the overall market environment, considering he is a typical bull?
It's going to scare the living daylights out of retail because they don't hear him say that. So I get how it actually is market moving, because a lot of retail is just like, oh, Tom's a rock star, which he has been, let's face it, for 2 years. And he's cautious, so maybe I got to be cautious. So that's what. is understanding it probably helped put some pressure on things today. Short term. I'm not saying he's moving markets forevermore, but short term, it does scare some people. Me, it's just, I'm like, oh, Tom's being logical. That's great. I appreciate the guy and his calls, but at the same time, there are times, no matter how bullish you are, to take a step back and, look at things with a clean lens. And to me, it was like, ooh, this is a rough setup for September. So I said Friday I hated the market setup, so he agrees with me as far as I'm concerned. Not that he's following me, but we're on the same page.
Yeah. We'll talk about what the market is focused on overall in just a sec, but you do have a bit of a focus on this Morgan Stanley Healthcare Conference that's coming up this week. To your favorite stock, Immunome, the CEO was speaking there, and then VKTX, Viking Therapeutics, you've been very active in Viking over the past few weeks. Their CEOs are both speaking at this conference. So talk about what you're expecting for both of these names, and then also possibly the overall impact it might have on the XBI, the fund that follows biotech.
I think XBI, small caps, are going to be more a function, frankly, of where we are. This is a big week for jobs. Where we are on JOLTS, where we are on ADP, and where we are on NFP, right? If we have a weaker jobs report, but yet not too weak to insinuate that we're about to have a deep, dark recession, but that we can have more rate cuts, I think they can perform very well. So I don't know if the overall conference is going to be market moving, but I think individual stocks can. Sometimes these guys, both CEOs are big time pros, are used to talking to the street. Whether or not there's major things to say, I don't know. I do know Clay is a home run hitter, right? He's the guy who founded Seagen that was bought for so much by Pfizer. Let's just say when he presents, it's like going to a famous rock and roll star's performance. So it could be big, but then again, he's also a blue chip type CEO, so he's not going to hype anyone if there's nothing to talk about in the near term. So we'll see what they have to say, but both have great setups over the next 12 months, and whether or not the CEOs have enough to say, I like to be aware they could, that the event's coming, but I can't say that like either has bona fide data to throw out. They're not planned to have bona fide data to throw out. So it's more how the street enjoys how they convey things and the setup going forward over the next year. Because over the next year, they both have a lot of data points that can come out. Whether or not it'll be enough for the street, I'm not sure. So we'll see.
All right. Before we get into our jobs discussion, somebody in the comments asked SMCI to 500 soon. Do you think that could happen? Talk about where you see SMCI going from here. The stock has been picked to join the S&P 500 and then just gotten obliterated.
I already said it.
So.
Don't care. Like no good trader, honestly, is going to care about SMCI going to 500 because we're pulling back on everything. Go buy Soxel, go buy AMAT, go buy Nvidia at the right price. Can it go higher? Sure, but I mean, there's a cloud over it, and yeah, it might rally, but who cares? Like, I'm going to find something I can bet on with a little bit more confidence that has less hair on it, right? So I'm not saying it won't work. That's 10% move. You want to take a shot, but I'll most likely be shorting literally today out of my mouth to the chat. Hey, if SMCI goes to 460, more than anything, it's probably an amazing short opportunity. That's what I said on it today. Not because it went there. I'm telling you, that's what I said. Literally, the chat could tell you. It went there and it pulled back promptly 20 points. I'm sure in this environment, with SOX down as much as it is today, there's got to be SOX or Soxel or AMAT or KLA or Dell. I mean, Dell's a much better company than SMCI. Margins aren't as weak. Like, there's got to be something else one can find. That's how I look at it. Now, I'm wrong. I've been wrong before, lots of times. So I can be wrong on this, but I think there's easier out there.
Yeah. All right. So as you mentioned, it is all about jobs this week. We'll get the JOLTS report tomorrow. We'll get ADP's private employment report for August on Thursday. And then, of course, the big guy, Friday, the NFP for August. What kind of data is the market hoping for? Do we want
weaker,
really bad data?
But not too weak. Pretty simple. We want to miss by 5-10% across the board. Just not more than that. We start to really see the jobs market implode. Well, then it's not going to be about our rate cuts enough. It's going to be about, we're getting a recession and small cap and bio and nothing really can work except for Mag 7 that does okay in a slower economy. So right now you want to see weaker, but not too weak. That Goldilocks type scenario.
Yeah, when it comes to so far, the numbers, have been very much that Goldilocks scenario. So the Fed
Except
is
for that
cutting
one
in.
big jobs report that was well beneath, and that scared the living daylights out of a few people.
Yeah, the Fed meeting is in 2 weeks from tomorrow, and of course, we are expecting a cut. It's pretty much a given. It's like maybe a 50, but really definitely 25
Yeah,
basis
so I think we're at
points.
70% 25, and my gut is 25. I don't see them going 50. But
Mhm.
NFP, if there's something that can change the dichotomy
Right.
there, it's going to be NFP. So
Yeah, the
that's
Fed has
why
definitely said
it's not
they're
only it's NFP,
focused.
it's NFP before the Fed, meets. So
Yeah, and the Fed has said, hey, okay, inflation's doing what it needs to do, whatever, but we're focused on the labor market here. We can't predict what the jobs number will be, but we can kind of opine on what the market reaction might be. So the market, of course, is looking for that Goldilocks number, the weaker but not too weak. What happens if we just get a really strong jobs report on Friday?
tell me where the market is before. It's no different than an earnings print. Where the market is pre that jobs report will matter as much
Mm,
as the jobs report itself. If we go
okay.
down into that print and it's a bit hot, that'll be okay because people
Yeah.
now are very confident we're going to get a rate cut. So if they then have the backdrop that it turns out that our economy is holding up pretty well and earnings should hold up, and we're going to get that rate cut, and the market just went down 5 or 7%, it's very viable. So tell me where the market is before. So a lot of where we are pre that print is going to be what matters.
Hmm. All right. Um, hold on. Sorry.
No, no worries.
There we go. All right. So for everyone who's with us live, I want to let David get back to trading. But if you want to be like this guy, maybe in the inner circle, taking me a while to get the hang of the way DP trades. I had a lot of fear trading this way, but this week I really stepped on the neck of the great idea, SMCI Affirm. And my account grew by 50% this week. For those new, trust DP when he says we must go bigger in the really meaty ideas and avoid overtrading when there's nothing to do. If you want to have an opportunity to be like this, you can go to t3live.com/DP and you can apply to join the inner circle with David. David, I think this highlights a really important
Yeah, let's just be
mantra that
fair. This
you,
guy's like a smaller guy for Inner Circle. Like he's like a $200,000-300,000 account. So you can have those types of alpha moves
yeah,
without even getting too crazy. So I don't want to pretend everyone's up over a period of a year. Yes, in a day or a week, that's insane. But I do
right.
think
But what I was saying, this focuses on a really good point that you drive home for the inner circle, that is going bigger in the ideas that are really worth it and not just doing trading just to trade because you're
thousand.
bored. You sit on your hands when you need to, when you don't see opportunity in the market. And just talk about that for just a little bit.
Sure. In a nutshell, I really believe that money. I mean, I don't believe. I know it's just fact that real money, no matter what size account you have, is made from a few stocks not being right 80-90% of the time. So I like to say that when we have a winner, like the way we had a firm and stuck with it and bought more on dips, that type of move, that one idea is going to be what drives 50% of your profits, right? The way Immunome was to us early in the year, 70-30, or XBI when it went 65-100, that you don't need to be right all the time. You need to size right in special ideas. And then the other side of it is to be okay taking losses. I think it was like a week ago where I bought some hut and thought it might be a cute idea and work. And when it broke and I saw it wasn't working, I said, this thing could get really ugly. I got to take a loss. So it goes back to everything you read about. Keeping your losses small, holding your winners more than a minute, and sometimes being willing to stick with your winners and add to them. So I think it's just always comes down to less is more, except really knowing that size is it matters in trading, not to be cute or funny, but size matters. There's certain times to be larger and increase your risk, and there's certain times where there's less to do and you downsize your risk. Literally what I did this morning. I mean, Redfin at 1050, 1060, I'm looking, it's 950 now. I'm like, I don't love this company. I don't like real estate here. It looks great, but God, I'm up like $1 and change from my buys on Friday. What the hell am I holding most of the stock for? I gotta sell. MDB, I'm like, great earnings, but not exactly a cheap stock. I hate the market here. We're up 20 points since our entry on Friday. Well, what am I so excited about? I got to get flat. So it's just like knowing when to size up and also knowing that the environment dictates the action. And sometimes you got to take profits. And sometimes you got to sit on your hands and not take profits. So it's just less ideas and really executing as best you can on the special ideas.
All right. All right. So David, you can go back to trading. I'll let you go. For everyone, David is, again, we'll just review, bearish the overall market, not excited about the current market environment.
I do believe we will get some buy opportunities once this selling occurs. I'm not bearish into the end of the year where the world's falling.
Yeah, just the current environment.
Next couple of weeks,
you're not a bear. You don't
wear off this overbought status. Absolutely.
All right. All right, great. All right, and we're headed into the jobs report on Friday, so there's still a lot to come this week. Could be a lot of catalysts to come. So, all right, go to t3live.com/GP to apply to join David and work with him. David, have a great rest of your day.
Thanks, Greta. Have a good day, everyone. Bye-bye.